Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Earnings, we got a few of those. Pepsi, Coke, Under Armour. Maybe we'll talk Blue Apron. I think Joel wants to talk about that, so we'll talk about that. The big news of the day is, of course, this merger Tuesday. I don't know. That's not very alliterative, but that's okay. Walgreens, Boots Alliance, and ABC reportedly in talks, according to Dow Jones. We would talk about that. We are joined today by Nick Shaheen. He's the author of Create Income with Option Spreads at 8:35. And we're also keeping an eye today on the financials with the Credit Suisse financial conference today. A lot of most of the big bank executives are speaking at that. So we'll have an eye on that today as well. Joel, tell us how we're doing this morning in the S&Ps.
We got a nice range in the S&Ps. Your after hours / pre-market high, 59.25. That's a few points above the close. So that will be one target on the upside. Pre-market low, 36 even. Have absolutely nothing there. So nice moving here in the SPOOs, trying to find a home. You have Bitcoin. You have that trading down just 1%. Just can't get away from 8,500. The futures are trading down 295. You have crude in the red by 30 cents, now under $59. Gold up $3 at $13.29.30. Silver in the red by a couple pennies as well. Let's bring in Dennis. Dennis, happy punch key day. And do you know the difference between an American punch key and a Canadian punch key?
Okay, give me your Canadian joke. Start it off early. I'm ready for it. I'm bringing it on.
A Canadian punch key has maple syrup on
it. He's making that up. He knows a lot of things, though, because he's half Canadian. He always jokes, but your mother was Canadian. We know that, Joel. So you're half Canadian.
I know. I give you it.
The punch keys, and we do have them. He was asking me on the earlier, do we have punch key day? Yes, I believe we do, because I go to the grocery store and I see the punch keys, but I don't think it's a huge thing here. Although I know, because when I go to Kroger in the States or Meijer, I see the punch keys front and center. So are you eating some punch keys today?
Spencer had 3 already.
Spencer?
I did not.
You already ate 3 punch keys?
I did not. I had 0.
I think you got some jam right on your beard there. He's like, oh, do I?
I've had 0.
Yeah.
Wait, I want to know the spelling of that, Dennis. How did they come up with that?
The punch key spelling is completely messed up. It looked like Pazuki or something. Spell it.
It's easy. It's like Paczki.
They just put a bunch of consonants together and hope for the best. How do you get punch key from that? Is that how you're supposed to say it? Is punch key?
It should be P-U-N punch and then ski, right?
That's what I would think. It's P-U-N-C-H-S-K-I is how I would spell it. But it's not that. It's not punch key. It's all messed up with the Z in there. I don't even know. They don't even pronounce the Z. The Z is silent. Notice I say Z because of the Canadian. Everybody's right. Like, what is a Z? What is a Z? We better get to the markets here because we really went on a bad tangent. We're losing. We just lost half our viewers. They just left right here, right now. So jump over. Spencer, lead the way through this great. Actually, let's forget about the earnings for a second. Let's jump right over into rumor land. And we have Rumor Tuesday from Dow Jones. It looks like Walgreens Boots is hungry again.
Yeah, they just bought 2,000 Rite Aid stores, right? And now, according to Dow Jones, they have made a takeover approach to AmerisourceBergen. This was last night around 7 p.m. Walgreens does have a 26% stake in the company already, but ABC is up and away off of this report.
It is gone. ABC is trading up $11 in the pre-market. It was trading up even higher last night. It was getting up like 109. I almost think I saw a 110 print last night. So it got a little bit crazy on just this rumor. So still just a rumor, but when it's broken by Dow Jones, it's probably pretty substantial, probably something to it. Obviously, the market is banking there's something to it because the stock is trading up 13% here in the pre-market. Walgreens is trading down about $1 in the pre-market because they've been hitting the acquirers on these mergers as of late. Give us your thoughts here, Joel. Do you think you're hungry? They're going to be buying Amerisource. What are your thoughts here as ABC trades up $11?
I'm a little. I wouldn't touch it. I mean, what's going on with J.P. Morgan, Berkshire Hathaway, and Amazon getting into this? I mean, getting into this field. They did the thing with Rite Aid. I mean, if I owned ABC and I saw that bat to 110, 111, I'd hit it. I'd take my profits on it, still trading up $12. It makes absolutely no sense to me at all. Especially
for Walgreens to be scooping up Amerisource Bergen.
Yep.
They should be trying to conserve cash for the battle with Amazon.
That's what I think. That's what I would do.
I think there's something to it. It really got overdone last night. Joel, talk about the after hours high because I was looking at this thing trade up at like 108, 109.
113.50, Dennis. 113.
113. What are people doing? Let's just stop and analyze this for a second. Here's a stock that is getting back not only all of its losses from the last 2 weeks, but an extra 8 points on top of it on just a rumor. So we're going to buy something up $23, $24 on a rumor. I mean, even if it materializes, that was probably the premium. So you're almost paying the entire premium after hours. People, I don't know if it's the algos or what it is, but people get crazy on these reports. And that was just overdone. So not surprisingly, it's given back at least $10, actually $12. So basically getting back half of the after hours gain. But that was just ridiculous when it was trading up over 110.
I heard a good point. I don't know when I was working at home one day, they had Leon Cooperman on, and he was talking about value in the market, him being a value investor. And when he looks at a stock, and let's say just any stock here, and he likes it at 20. Well, if you're, a deep pocket long-term investor, you like it at 20, you take part of a stake. It goes to 19, you like it more, right? You buy more at 19. If it goes to 18, then it has to be great. If you loved it at 20 and whatever. And he admit that he takes losses and doing on positions like this. But he says now, with the market in the algos, if something's at 20, they like it at 20. They like it more at 21. They like it more at 22. They love it at 23. They 24. You got to own it. I mean, how, some of these stocks and these parabolic moves has that nothing to do with value investors buying it. It's all, it's all machines. And I thought that was an excellent point. So alluding to what you were just talking about, hey, 101, why not 102? 102, why not 103? 104, 105? These guys aren't in this for the merger. They're not in this for the actual deal. They can buy it at 103 and sell it at 106. That's all they care about. Nothing about the true value of the company. So that's my explanation for what happened. Just keep an eye on $100 on the downside after we hit that 113.50. You're finding support at $100. Have absolutely no idea where the price would be in this acquisition.
It's a good point you're making. It's all about momentum. This market has been that way for a long time. The contrarian traders have struggled, and that's because we've been straight up for 3 or 4 years. Now we've been straight down for a couple of weeks here, but it's just momentum. And you're right. It's, it seems like, when a stock starts going up, it's not about the value. When stock, it used to be like the Warren Buffett approach. Stock was like exactly what you're saying. Stock was at 20, comes down to 19, you like it more. Stock at 18, you like it more. It's not that way anymore. Everybody's technical. Machines are all technical. They're looking for, the paused momentum to get going, get the ball rolling, and then they like it. And maybe that's the way you got to trade. I mean, it's tough to be contrarian, so you got to go with the flow. And it seems like you're right. As the price is going up, analysts even, chase price.
Oh, for sure.
It seems like everybody likes it more as the price is going up. So it's counterintuitive, but that's the way the market's been working for a long time now. And that's the way momentum markets work. We will eventually go back to contrarian markets where fade trades seem to work better, but it just hasn't been the case. It's like when the ball gets going in one direction, it just continues to go in that direction, and it's hard to get it going the other direction. Jump over here to earnings land. Actually,
you want to talk? Sympathy moves.
Yeah.
Here? Okay.
So here's interesting. This market is really tricky because you think, okay, logically speaking, I see ABC in play. I think, well, maybe CAH, maybe MCK in play too. last night makes complete sense to me. These stocks start getting bid up. McKesson was trading up 2%. CAH, Cardinal Health, was trading up over 2% last night after hours. I come in this morning, they're trading red. So anybody who's bought those things last night, I don't know if there's individual news. I didn't check the wire, but both McKesson and Cardinal are in the red, which is absolutely shocking to me. Just to, from a sympathy trader perspective, I would think that if ABC is trading up and in play, then MCK and CAH are in play as well. But maybe the market's thinking, well, there's not a lot of suitors out there. And if Walgreens going after ABC, then they're not going after MCK and they're not going after CAH. That's all I can think about to explain why Cardinal and McKesson are both trading down. I know Cardinal has some more lawsuits against it, but I'm not sure if that's new news or not. I just saw that go by. So maybe that's a little bit to do with Cardinal. But in any regard here, they're not getting a sympathy pop.
All right, let's just there was a pop in a few of them. Wow, kind of no man's land in these charts. These stocks had a big major low. This must have been with lawsuits in November. Got over $75. Pull back. I don't know. I don't even know what to tell you on this chart. I guess I would look at the $69 area. You had a high at $893, $881, and $902. So we're trading down well below that. So until we clear 69, this thing has room on the downside. Recent low of the move is 62.40. I mean, just no man's land. Let's take a look at McKesson. This stock has had some rough times as too. It hit 180. I don't know. These charts are tough. There's nothing to lean on here, Dennis.
It's tough when there's news all over the sector too. So just watch. If you're careful, if you think they're getting a sympathy pop, they really didn't last night. And you've caught some sympathy players on the wrong side of the trade here. Now that's always a consideration when you get, the natural move up last night. A lot of people buying it up and they're coming in this morning. They're thinking they got good buys and they're down on these positions. Now they're scrambling and they're, scratching their heads and they're concerned. And so the short-term money has probably caught long these things a little bit, and that can equal a washout. And I think you're seeing a little bit about that this morning. Jump over here, Joel, just to earnings land, and we're going to throw it to Spencer here because we have Under Armour, and Under Armour is actually having a really good morning. For once.
Their Q4 adjusted EPS was 0 cents, which was the estimate. Let me get the chart up on the screen. There we go. Sales of $1.37 versus $1.31 billion. So they beat that number as well. So a meet on the EPS and a beat on the sales.
UA trading up fairly substantially here in the pre-market. We got it up 8%. You can pick your poison. There's two stocks to trade, UA or UAA. UAA is trading up 11% in the pre-market. So both of these stocks getting a nice lift. I mean, they've been getting a nice lift for a couple of days, and the follow-through continues here. The only thing concerning to me, if you look in, let's go to the UA chart here, is here we are. We're trading up over $14 now. I mean, 3 days ago, we were under 12. Yes, it's a good report, but you got all kinds of pesky highs up there when you start to get towards 15. So I start thinking risk reward here now doesn't look nearly as good as this thing when it was at 12. So you had a nice run up ahead of the earnings, get the beat on the earnings. It is moving. It is obviously up here this morning. It is a retailer that has lagged. It is still a retailer, though, that has a fairly high PE. How much money did they make? What was the number?
It was 0 cents per share.
Okay, well, it's hard to calculate a PE when they're not making any money. So we'll just, we'll just leave that alone. But in any regard here, valuation has always been an issue. It's why I never bought Under Armour, because the valuation was always higher than some of the other retailers. So 14.25 this morning, I'm not chasing it.
It's off the highs of the pre-market session. You did get a print up near $15. Looks like a $14.90 print. You backed off 60 cents through since that time. Did have one print here at two highs you got to worry about if you get to the pre-market high. 15.14 was your high on January 8th, and then your high for the year is that's way up at 15.69. So not seeing that today. If you are playing this from the short side, if it gets flat on the day, yesterday's close was 13.18, 13.43 fills the gap.
Okay, going back, RCA with the save here. I did not notice this headline. So thanks, RCA, from the chat. Amazon is said to mull medical supply business expansion. So that is why, obviously, all these stocks like Cardinal Health, you've got Walgreens trading down this morning, but you've also got McKesson. So where Cardinal Health and McKesson were getting the nice sympathy pop last night, which you would think would normal, they got Amazon this morning. So Amazon said to Mall medical supply business expansion. That's from the Wall Street Journal. That is why you're seeing CAH, and that is why MCK are trading down this morning, despite obviously a stock in the sector being in play.
Great catch.
Thanks, RCA.
Yeah, I missed that too. Great catch.
I did too. I mean, you see a lot of Amazon headlines all the time, and I missed it. All right, continuing on this earnings party, we got Pepsi earnings, and those were this morning. And Pepsi was trading up significantly on its report, but it's given it all back. Give us the numbers. We'll break down that pre-market action.
A lot to report here. The adjusted EPS of $1.31 versus $1.30, so they beat by a penny. Sales of $19.53 versus $19.39 billion. So they beat both those numbers. They're also raising their annual dividend from $3.22 to $3.71 per share, effective as of the June dividend. They announced a $15 billion buyback plan, and they gave guidance in the $5.70 range.
It all sounds pretty good. Stock got a nice lift pre-market. Where do we get to?
114 on the nose. And that was it.
And then we started leaking, and now they've pulled the rug out from under this thing, and it is now trading in the red. And when stocks have good reports and they turn to the red, it is always a good idea to maybe hit the exit button, because sometimes these things get worse. So I know a lot of people say, oh, it's in the red, it was a good report, it's going to come back. It doesn't seem to be the case. It's like you're fighting after the report to figure out who's going to win. And, you got the bears trying to take it to the red. The bulls obviously buying. The algo's buying off of the good numbers. When they actually get it to the red, that's when a lot of people say, oh, and you have a lot of other people saying it can't go up on a good report. I'm getting out too. So it's always a tell. That's the most important thing on an earnings report after when they're in the digestion period is if you have a good report and the stock trades up and comes back to the red, it seems to always get worse. So I don't want any part of Pepsi because I don't like it seeing in the red after that report. I know it's on light volume. It's only traded 24,000 shares, but the thing's got to get back up over 112 before I get interested, at least from the long side.
Your pre-market low stands at 110.75. So Monday's low is going to come into play here at 111.06. Just another word of caution here. On Friday, when the market melted down here, this got down to 108.88. So if you lose this 111 level with a vengeance, there could be $2 a downside. 108.88 is your big number on the downside. Looking for a little bit in between that. 110.15 has been the low close of the recent down move, but look out under 111.06.
HMNY, Spencer's talking about in the chat. And yes, it was an offering that is knocking it down this morning. This stock, which was that darling back in October when it went from $3 to like $40, that was absolutely ridiculous. Came back to earth a month later, got down under $10. And I think it actually got citroned up there. And that's why the stock had the big fall. I think Andrew Left came out and said it was ridiculous. And the stock went from like 38 to 20 that day. I remember off Andrew Left. I mean, there's nobody more influential out there than Citron Research. Got down to $5, came back up to 10. Now it's getting back down. Offering. What's the price of this offering, Spencer?
They didn't actually give a price on the offering yet.
Oh, I think I saw it. Hey, they didn't. They gave a range.
Right. It's $6.50 to
$5.50. I thought I saw. Let me go look.
Yeah.
$5.50 to $6.
Okay.
$5.50 to $6. So these things act like magnets. So when you get these prices, they seem to pull them down to the word so's price. So that's why, not surprising, it's trading towards the upper end of the range at $6, but $5.50 to $6 is where the shares are said to be offered.
Pre-market low under $6 here at 584, just hanging out around 6. So that's where the street is thinking this may be priced at. The problem with this stock, and when I think about fundamentals and everything, I mean, the movie industry, are people going to movies?
What exactly? I don't understand this. So HMNY, I know it's his movie pass thing, but tell me first of all, what the hell is a movie pass, and what is HMNY? How do they fit in all this?
It's basically a
pass, Spencer?
Yeah, it's basically a pass. Movie pass is a pass you can buy that allows you pay a flat rate, and then you can go see as many movies as you want in the theater.
So it's just like if an HMNY sell these movie passes. So
yeah.
What is the flat rate? Like you pay $100, you see as many movies as you want the next 6 months or
monthly,
something?
Isn't it?
Yeah, it's a monthly subscription that you pay, and then you get.
And all the theaters participate in this.
No, I don't know. Not that's not all the theaters participate in this. That's one of the.
So it's like Groupon for movies. It's like a deal. Like
sure, okay.
Oh wow.
I guess you can call it that.
Oh yeah.
That's just like, I wish I would have known this when I traded $35 or 30.
Anyways, okay, so I don't know anything about that. I'm done with this HMNY. $1. It's $6 here now. The story from in my part is really over. I mean, sure, you've got that 550 to 6. A lot of times those ranges act like support. So if you're trading it, it is coming into that support. Obviously, you got the $5 level there below. But I don't know. This sounds just to me like something that might not have a lot of long term.
There you go. Hey,
I'm not in this long term. I'll say that way.
I mean, there's not enough good movies to see to like validate having one of these things, right?
They don't make good movies anymore. Me and Joel are old, so
The Post. Did you see The Post?
It's true though. What's been the last okay? Let's stop. Like they made awesome movies back in the day, but all the movies now are like remakes of the old movies. It's like they don't have good stories anymore.
In my day, they made the best movies, and the movies today, and they've been saying that for 50 years, but they've always been wrong. But now it's right because in my day, they made good movies.
What was your day like? Lion King or something like that?
I'm being facetious. People say this all the time. People have been saying that SNL used to be good since the 70s. Right, it's been around since the 70s.
Been good since we lost Will Ferrell.
Right, they've been saying that in the entire history of the show. So my point is, there are good movies out there. You just have to. The
Post is a good movie. If anybody wants to see a good movie, right. I don't know how we ended up. I guess it was my fault because I started talking about HMNY and the movie pass. Coke had earnings too, correct?
I thought they did. For some reason, they're on my list, but no, I don't know why.
No, Coke didn't.
I don't know why they're on my list. Yeah, they're on my list.
No,
I don't know why.
All right, just Pepsi. I mean, they're pretty much the same thing, but
jump over. Who else do we have? We had Weibo. Where else do you want to
go? You can go Weibo, but last night we had FMC. It's always a fun one there. So, and it was chopping around quite a bit. No shares really traded this morning, but it was chopping around after the report. Lithium, right? FMC.
I believe so.
I'm throwing under the bus.
Okay,
pretty sure it's
sure. $1.10, which is a 5-cent beat. Sales of 980 versus $996 million. So a slight miss on that number. Q1 guidance EPS coming in way higher. $1.12 was the estimate. $1.45 to $1.59 is what they see for the quarter. The fiscal year EPS coming in line.
I've been interested in these lithium plays. I mean, obviously they've got a lot of. If we're going that way, lithium is going to be in demand. I mean, two stocks that haven't beat up are ALB and FMC, two of your biggest lithium companies here. So I don't know. I'm kind of interested on a pullback here. I got to analyze them more from a valuation perspective. This would be as investments. I'm kind of interested, but technically speaking, these stocks have broken. They've broken down. 90 was the level that this needed to hold. It broke down through that, obviously, when we had the weakness in the market a couple of weeks ago. And it's got to get back up over that to really start getting that uptrend again. And the trend in this market is really your friend. And that's the difficulty here in coming to FMC because there's overhead supply. Everybody who bought at 90, 95, 100 be selling if it gets back up into those 90s. So I see a lot of overhead supply.
Yeah, a little bit of a breakout here, though. 86 has been keeping a lid on this going back to the 7th. So after the last week or so, 86 has been an area of resistance. You are breaking above that now. So the next relevant level for me comes in at 87.33. If you're looking for another target, that's only 40 cents away. But you just look at this chart and there's nothing really sticking out at $90. I can't give you a daily high at 90, but just seems like, this would be the thing that if the algos, come in and start just buying this thing up, not a lot of room. If you take out 88.73, there's nothing to 91.63. If you're a big time bull, you can figure out the 50% retracement of your move from like 99. What did it get down to? Let's call it 80.19. So what's that? 9.5. Yeah, that's 19. That's 9.5, 8.5. That's right back in the 90 area too. So could be a potential target if this thing can keep going. I don't think there's a lot of volume traded right in this, Dennis. No, Very small volume in this one.
It's been volume. So yeah, so you got to wait till the regular session to really see, which way they're going to take this thing. And that's the one thing we always talk about in the pre-market. When you see only 5 shares of trade this morning, only traded a few shares last night, still trying to digest, still trying to figure it out. The real liquidity is going to come in at 9:30, and that'll give you a better feel. So sometimes these things have wicked moves after 9:30 because that's when the institutional money comes in. I'll still say it, 90 to 95% of your institutions don't trade pre-market after hours because the liquidity is not there for them. So, they don't want to come in here and, try to dump a big amount of stock into nothing. So they wait until after the market opens to start to say, what they want to say or get out of their position or get into their position. And that's why you see some violent, wicked moves sometimes after a stock opens.
I think they'll put out some feeler orders,
Sometimes, yeah, but you know what? No, because these guys aren't traders, Joel. And that's the one thing. If you've got, okay, sure, the traders are going to be doing that. Some of the big, maybe some of the hedge funds, those ones might be doing it. But your Fidelities, your Templetons, those guys are just at order executions. They're using VWAP, they're using different things. Those guys aren't throwing feeler orders out there. They just want in or out. I mean, these traders that they've got, are working big orders, and they're not trying to influence the market in whatever way they can. They want to have as least an impact as they can. But those are the real movers. Those are the guys that are going to move the price. So I think you have, some traders like the hedge funds and traders like us, which would, maybe throw out a feeler order. And what Joel means by a feeler order is if you've got a lot of stock to buy, you throw out, okay, well, I'm going to buy 100 shares and see what that does to the market. And if it chases up, it's like, oh, that's, pushing it away too much. Or, if you get filled right away, it's okay. Well, I've got somebody to sell here. There's somebody else here. So maybe that's going to help. So that's what Joel means by like a feeler order. It's how you get executed on that smaller order will tell you whether you can get executed on a bigger piece or not.
All right. Stargazer here in the YouTube chat is asking about Generac. How'd they do, Spencer? Earnings.
This was the
generators.
Generator.
Thank you. I couldn't think of the word there.
This should be their quarter, right? After the hurricanes?
I think you're beyond it.
Yeah, I think we're beyond it too.
I think that would have been last quarter. Would have been hurricanes.
$1.37 versus $1.19, and sales of 488 versus $475 million. So they beat on both those numbers. They're also making an acquisition, though the terms were not disclosed.
Nice move here for GNRC. Nice move up in the pre-market. Again, we got the same story here. It's traded 500 shares.
Yeah, that's it.
So yes, you can say, oh, this is nice in the pre-market, but there's no volume with this, which means, it's 50.05 to 53. It is bid of 50.05. It does look like a good quarter. It probably goes up, but things happen quickly and they can change quickly because when real volume comes in after 9:30, all it takes one institution to say, I don't like that quarter, and the thing could be back to flat. So that's, why it's hard to just make a call and say, oh, great quarter, stock's going to fly when it's only traded 500 shares in the pre-market.
I think I'd stick with that analysis in this one. Nice run up, or at least off the low. You got hit, was down at 45.17 on Friday. A pair of highs at 49, right at 49 even, 49.07. We are above that. We are a bit above that. So I'll look at 49.89. That was still your high on February 5th. So there you go. I mean, stay above $50. Maybe play this to the long side. Under $50, you got a long way to go to fill the gap. 48.51 was yesterday's high. So you could easily see that if a seller comes in, trading up on very little volume.
Last one, we might as well go to Weibo, cover it. WB, it is trading up $6 here in the pre-market. Chinese, what does Weibo do? Do you know, Spencer, off the top of your head?
Yeah, they're Chinese Twitter.
That's Chinese Twitter.
Yeah,
okay, cool.
Weibo. And the Q4 EPS is 64 cents versus a 58-cent estimate. Revenue 377 versus $362 million. So it's a Chinese internet stock, which means it's hot by nature. What are you guys seeing in the charts?
Wachovia Bank here is trading.
We can't get Joel so old. No, so yeah, WB used to be Wachovia Bank before they got taken over.
Not much here. We're trading up. I mean, there's a pretty good pattern. I'd say
80,000 shares.
Yeah. 124. Definitely want to hold that here on the downside. You've had a couple pokes into the 126 handle. 127.08 is your pre-market high. Boy, this thing really moves around. I'd say if it could get through that, 128.59 was your high on February 2nd. Can't really I get much on the resistance on this one though, but if I was playing from the long side, 75 cents away from 124, I would not like to see it under 124. Got a long ways to go to fill the gap. 119.89 was the high of Monday's session.
Speaking of Twitter, just going back off that tangent there, imbalances just came out. 106,000 to sell in Twitter. This is a trend now. This is 2 or 3 days in a row we've saw a significant seller in Twitter in the pre-market, and that is concerning. I said it yesterday. Remember on the show when the markets, everything was trading higher. I'm like, there's a seller here in the morning in Twitter, and actually Twitter ended up going down. I think it might have even opened red. It was trading in the red yesterday there for a while. Off of, and obviously everything else was trading green yesterday. I think I've got the day right. And here we are again, another seller. So 106,000 shares. So some institution that is lightening up their Twitter position after the big gap up after earnings. And that's somewhat concerning if you're a trader, because these institutions are often right.
And remember what Andrew Laff's target was when he came out a little over?
It's left out. He sold it, right?
Well, I mean, I don't think he got done at 35. That was his target. And that was the exact high on earnings day, 35, even on the earnings day. And I think it traded that in a regular session too. So I don't know. I mean, looking at the daily here on Twitter, I mean, it's one of these stocks that you want it to go down so you can buy it. You know, I'd love to see this, lose a little bit of luster. The big number folks need to keep an eye on, the huge number on the downside is 29.70. That's a pair of lows after the report, 29.71, 29.68. Now, if it cracks that, it's not going to go down and immediately fill the gap, but that's a big area. And I'm sure some institutions or some bigger players will say, as long as it holds that double bottom, I'm going to be okay. But if it starts to get out of there, try and lock in some profits here in that big gap up day.
Alibaba, 66,000 to buy. Stock is still trading down. So one of two things have to happen there. The opening imbalance has to go negative or the stock has to climb. I'd kind of bank with the day that we're down like this, that probably there's going to be some sellers that come in to offset that 66,000 share buy imbalance. General Electric, 57,000 to sell. Procter Gamble, 30,000 to buy. Man, they are small today. Square, 106,000 to buy in Square, SQ. I haven't talked about Square in a while. Let's go look at this chart. I haven't looked at it for a while. So obviously the big sell-off after November, December, the big run-up for everything in January, and then the sell-off in February. It's kind of just following the market, looks like. SQ.
Big number. What I'd be leaning on here, if it gets into the 40 handle, your pair of highs, 40.46 and 40.57. You did trade higher above that later or, earlier in last week. But right now, if this doesn't clear 40.50 real soon here, I look for some more work on the downside. And I mean, made the run up near old time high, but came back down. But folks, keep an eye on 40.5 in Square.
8:33. We got 1 minute before our guest. You wanted to talk Blue Apron earnings, and we didn't give APR. I gave PRN so little love that I didn't even write them on my sheet that they were reporting earnings. So, but you told me this morning the Blue Apron did report earnings. Spencer, how did they do?
They did well for Blue Apron, at least. EPS 20-cent loss, which is a 7-cent beat.
They did well for Blue Apron. They only lost 20 cents.
Right. Hey, 7-cent beat though. Sales of 187 versus 185 $1 million. So good numbers for this is like their third earnings report since they IPO'd. I mean, look, this is their second or third.
This company's burning cash.
This is their third earnings report, and it's the first time that they came in higher than the estimate. So they're making progress.
The first time ever beat, and they're still losing 20 cents. And it's up 10% here this morning. Overhead supply like crazy. Joel, you were telling me after our pre-market here, they really got crazy with APRN. How high did the stock get?
445.
And guys, if you learn anything from this pre-market show, don't chase dog stocks up 30-40% on earnings reports because they give it back. And this thing is an eternal dog. You look at the chart and this thing just has not been able to catch a bid. So if it's trading up after hours, you have so many people that are saying, oh, if I could just get back to $4, if I could just go back to 420. They look at after hours, they're like, holy cow, it's trading up at 430. Hit that bid, hit that bid. Institutions say, hit that bid, get me out of this stock. And that's what came all the way down now to 370. So there's all kinds of overhead supply over $4. So I'm a seller over 4. If this thing decides to get back up there, I think you got overhead supply. I think it eventually leaks back down to 3 again. 3 has been the magnet. I don't think that's happening today. I just think when I look at this thing 3 months from now, I think it's $3 or less. I think the APRN story is just in tough.
Anybody that loaded up on this ahead of the report was out there selling in the pre-market for 45, but came back down to 345. And now, I mean, it's trying. It really is. It's trying to rally here. Traded almost 600,000 shares. Only relevant number here. Where we're trading right now, 372 is your 3-day high. So it holds in here. It looks like it's holding in there pretty good. I think you bust in to the $4 handle. And when's the last time we traded over $4? 413, 417. If you want to target, that was a double top. January 3rd and January 4th. And also that 417 represents the high for 2018.
836.
Yep,
We'll get our guest.
I'm bringing on Nick Shaheen right now, and we'll see if he's... Nick, are you with us?
I am.
How's it going?
Going pretty well. How about yourselves?
Going good. We're just sitting here trying to figure out what's going on out there on the West Coast.
The West Coast weather is great. Getting a little bit colder, but I can't complain. I have friends in Michigan, so.
Is that us?
What's your temperature?
Do you have friends besides us, Nick, or do you have?
You call yourself friend? Yes, I do have friends other than you guys.
Where at? Where at?
You know what? I don't know. It's
good friends then, huh?
Yeah, well, they moved, so I don't know the new place. I haven't
challenged whether you have friends, Nick.
Yeah. I'll send you their pictures.
What's going on, buddy? What are you seeing out there?
Well, I'm trying to see why we're down this morning. Yesterday I was trying to listen to the media coverage. I have to keep in touch with everybody's opinions, not just your own. Otherwise, you get stuck in your own loop. So I hear experts saying that yesterday we had some sort of a dip, or the last couple of days we had dips on jittery interest rates, especially the 10-year. And when I look, I posted a chart yesterday, the 10-year and the market, they were moving in tandem. What was scaring the market? I mean, the signs of scary points of the day were when bonds were rallying. And so it wasn't that. Some other stuff is in there. So here's how I see it. The trigger was the 10-year. The trigger was the report that showed that we had wage inflation. But if you remember, maybe in the last 2 years where the Fed was so frustrated they couldn't tell us why inflation, CPI, wasn't rising, then they said, well, we should probably look at something else. So they promoted wage inflation as the scary thing to look at. And so recently, that triggered the fear, and then we have people like on CNBC drawing a hard line on 3% on the 10-year yield. So is 3% or 3.2 or 2.7 gonna cause Apple to sell fewer phones? I don't think so. So it's not that scary, the 3% line. In fact, technically it was going there, and I tell you, technically it could go to 4 if like 3.25 gets taken out on a monthly chart if you look at it. So
what does that do to stocks though if we go to like 3.5, or if we went to 4?
I don't think it'll do much because it's how it is. The scary headline comes out, we react in a tizzy, and then the next time we see the scary headline, we don't react as much.
Yeah.
So I think we got the boogeyman out, and now we know what he looks like. And we'll probably move on. We'll know tomorrow. We have a CPI report, right? We have inflation report tomorrow due out in the morning. So we'll know what we're going to do. Is inflation going to be hot like wage inflation? If not, then maybe we'll move on. Or is it, if it's hot, we'll see how the market will react to it. So it's a coin flip. We don't know what we're going to do tomorrow. So are we going to sell off today ahead of tomorrow? Are we going to rally ahead of tomorrow? But if you look at the indices and you look at the stocks and the reaction, you have levels. We have levels of support. I have good friends who are expecting much lower prices from here, retest at the low and even lower. I think we need a new headline for that. My personal opinion. I mean,
so you think the lows are in maybe if we don't get the new headline like that was 2 days ago when we had, or on Friday afternoon we had that wicked rally off of after being down 500 points and then up 500 points, basically 1,000-point intraday rally in the afternoon on the Dow. You think that was the low?
I think that we need new reasons to breach them. Yes. So with the current headlines, without a new headline, I think we breached them. And I don't think it was bears who were pressing the shorts. It was bulls booking profits. So if that's the case, and there's no new scary, why would they? The balance, they stop selling. The balance of sell buys will just get imbalanced and maybe tip over to the buy side. So there are opportunities. We've noted them in the chat room, and I sent out good notes. In fact, the only bummer today I see is oil. And in fact, a few days ago, I sent out a note saying I can technically argue for oil at 58 or 59. 59, I think I said. Well, here we are, below that. So I was skeptical of the Goldman Sachs note to 80 on oil. And I'm still skeptical for it up here, but I don't say it's going to crash, but it's dragging. But I think the fundamentals in the financials are solid. And what's that, 20% of the market? The fundamentals in the top 5 in the NASDAQ are solid. How cheap can Apple get? How Google? I'll tell you what, Dennis, listen to this. During the tizzy, I sold puts in Google at $7.20 for $12. So 10 minutes
People
later.
get crazy.
Yeah, 10 minutes later, I bought them back for 10. Yeah. So the premiums. So what I did with that is somebody bought a lottery ticket that
How
Google
far did you have to go out? How far was that out?
I went. It was a leap. I think it was next year, first couple of months. About a year. And it was but somebody bought a lottery ticket that Google will go to 720, and they paid a premium for it because the VIX was so high. It inflates all the.
You want to be selling options when the VIX is that high.
That's exactly what I'm saying. So if I wanted to go long, I start selling puts or put spreads and maybe nibbling a little bit of call spreads, because even if the markets start to rally, the VIX is going to drop. It's going to offset some of the premium. So the premiums won't get bloated quickly like that you would expect. So we say, what's going on? Market's moving my way and I'm not getting the juice. That's because the VIX is falling. So it offsets some of the movement. So this is when, if you have a thesis, you don't just sell puts or put spreads. You have to sell based on, I have to sell based on fundamentals. So if I see a good value in the XLF or in banks, I sell puts below a level where I think it'll be ridiculous. Right now, what are they? One book, price to book. So lower than that is definitely a bargain. So I don't mind owning it lower. So if I sold at 25, 4 or 5 months out, that's on the XLF, for example, that's pretty good risk for me.
Nick, I want to ask you just an execution question. Did you put an offer out there on that kind of trade? Because you're going out a year and an option, it's $300 out of the money. Did it go bid there? Did you just throw something, pick a price, look at your account, your status? I'm just curious if it went bid there or you had an order out, just execution purposes.
Yeah. Usually what I do for execution, especially when it's something ambiguous, but in this case, Google is liquid enough that it's not ambiguous. So I'll tell you, I usually look at the mark, which is the mathematical middle between the bid and ask. And people say, well, the bid is this and the bid and ask is that. I don't care. Tell me what the mark is. It's going to fill around the mark.
You're right.
And usually when it's that far out in time, what I do, Joel, is I go my side. So if it's showing 12, I ask for 20. Because sometimes the bid and ask and the mark are completely whacked out and I don't want to risk it. So it's not going to fill at 20, but I'll leave it there for a little bit and see how the prices move once there's an actual demand for it. So then I'll wait and then I'll walk it down towards the mark, and somewhere around the mark you'll get a fill.
There's good liquidity. Nick, just talking about interest rates here, I want to talk to you a little bit about utilities, and that's something that I haven't I've been invested in pretty heavy for quite a long time. Probably haven't gotten huge returns at the market, but served me pretty well during times of turmoil. But now I don't know. I'm looking at the XLU here, and I think that although they're supposed to be like a safe haven, I think now just looking at the possible bump up in interest rates here in a flat market. I mean, interest rates probably aren't going down at all here. Do you think it's time to, maybe just step aside out of this normally safe haven sector, utilities, and just give it a little time to shake out?
I don't trade utilities because there are variables that I can't control and I don't quite understand all of them. They're above my pay grade, so to speak. So to trade it, I would have to refer to technicals. But if you think that whatever has been going on for the last few months is going to continue, this would be a good point to step in, because if you look at it, I'll share the XLU weekly. It'll give you clarity. So on the XLU weekly, it shows that we've had a decent dip, and it comes to a point that used to be resistance. So if you go back to 2015, January, they failed there. And they took their time to get back there, and then cup of handle style-ish, they broke through it. They teetered back and forth, but they finally established it as a point of a launching point. And here they are back at it again. So if 48 is not the bottom, maybe 46 is. So you would need a complete change in picture, in my opinion, for that 46 to let go, because it was the last bounce area. So from the standpoint of being bullish on that, I could risk a little bit on debit call spreads or calls. I could even probably start with that, and if it falls further, maybe try my luck with a credit put spread or so to try to do that trade.
I want to talk to you about the move in Apple yesterday. I mean, holy smokes, that had one of its best days in years. I mean, I don't want to give Barron's too much credit here. They did come out over the weekend with a favorable piece, and I'm just trying to come up with possible hypothesis for this. And you know what I think there might have been a big exercise or something where someone just got some puts, just jammed to them, and they were stuck and had to cover. I mean, what's your thesis for that? I mean, that's one of the biggest updates it's had, non-earnings report, and I don't know how many years. So give us your comments on the move in Apple yesterday.
Yeah, that was. I thought the sell-off was a little strange in Apple. There were a lot of funky candles in Apple recently, and in fact, yesterday or the day before, I think it was yesterday. I sold put spreads in Apple, and I meant to hold them for a while, but the rip came so fast. I was like, wait a minute, I'm going to take them off right now and book 70% of the profits. Usually when that happens, I get lucky. I just bail. I don't know exactly what broke down. Is there a quiet period? Maybe the quiet period ended of them buying their own stock and they started buying them. I'm not sure what happened. Maybe Buffett placed an order. But the zone where Apple was is just like we talked about the XLU. If you look to the left, it's been a breakout zone a couple of times. So it's a pivotal zone. And once they revisit that area, the bulls and bears that fought it out, they're going to fight it out again. The bulls are not going to just lay down. If my thesis is correct that the selling has been bulls booking profits, then it makes sense that once the bulls are no longer as scared as they were the 2 Fridays ago, then it tips in their favor. And Apple, if you remember, it used to be a safe haven trade. When markets are fleeing, the first place they go into is Apple. And then when they decide, all the stocks are going, then they dump Apple and they go into bonds and gold and stuff like that. So the markets were challenged during that, when Apple was green and it was greener, got greener. And then suddenly everybody looked around, was like, wait a minute, why are we selling? And I think, Apple has mathematical reasons not to sell. It's pretty cheap, but it's always been cheap. But there's no reason to say, okay, it's going to 120 or one. And I bet you, let's ask yourself this: if Apple goes to 135, that's a number that I hear a lot of experts on TV mention as the turning point. I think it's 137.50 in my opinion. But if you look at the bottom of my chart, that little green bar that comes across. So if that was the neckline that reset Apple, if it gets there, who's going to buy it? I bet a lot of people would.
I tell you right now, I haven't looked at this chart in a few days here, and boy, oh boy, I just love this level here. First of all, you got a triple top just under 164. That's like 3-4 of your last 6 highs. But also at 165 comes in your 50% retracement from the move from 180, Look at how nice these whole number works. 180.10 is your all-time high. The low of the move, 150.24, your 50% retracement. Any math magician could do that. 165. So this whole 164, 165 area is crucial, not only for Apple, but for the market to, get back, going back towards the highs. So I'm going to mark that one down. I'm going to keep that up on an eye on that, not just on a day trade or whatever, a weekly, a daily, and a weekly closing basis. Huge number for Apple there.
Yeah, and mathematically, Apple, I think, is what, every 1% is 0.15 on the Qs or something like that. I mean, I wish they published those numbers more often as far as its weight. So I'm left every day watching the stinking VIX futures. Not the VIX, it's VIX futures, because that's really a cleaner look at volatility and how it moves. And we've managed in the chat room to actually trade it intraday. That's not my cup of tea. I don't like to do that. It's too stressful. But we're reduced to doing that until this volatility eases. So I'm looking at intraday, a 1 minute, 5 minute chart on the VIX. And like right now, it's looking like it wants to bounce higher, and then of course that will drop markets lower. But I'm also looking at the 30-minute lines, and I'm seeing lower highs on, and the highs are coming on lower volume. So, and I also read some sort of a manipulation story on the VIX. So I don't know how long this volatility is going to last, and I don't think the VIX is going to be the right measurement of that volatility going forward. So keep your eye on that and see where the story goes.
Nick, from our chat, we got Downward Dog wants to know about Johnson & Johnson, J&J. Tons of volatility, too. We had a little flash crash there back on February the 5th, and the stock got down to $122. It could not get back down to that level, and now it's starting to find some buyers. Is J&J something you're interested in?
I am, because it is a perception, right, counts for a lot. Perceived as a quality stock, and it's well managed. So fundamentally, there's no knock against it. So you're only left to say, okay, let me pick an entry point that actually makes sense. So I don't know if I can look at it and say, okay, the PE is cheap enough that I do that, but perception counts for a lot. So technically speaking, the 135, 136 area was lost, and that was the neckline for the breakout that brought it to the recent highs. And now that should become some sort of a resistance. In fact, there's another level kind of like it at 132.5-ish. So now I look, okay, where's support? First of all, where it is now, it is at a prior balance level, not balance, breakout level that happened back in May of 2017. There was a cup and handle-ish pattern that launched it up to the 136. So here it is right now. So it has a chance to use that, the prior resistance at that level from back in May, as support, and say, okay, forward support, so I can rebuild my trend. The sell-off was sharp, but that was market-wide. So here's the thing: whenever you get a tizzy like this, you look at the bottom of the candle, the wick, not the wick, the tail they leave behind it. So I see one at like 123. So I consider that the world ended that day, and 123, 122 and change is where they wanted it to go. So if I were seller of puts, I'll consider that number as to, okay, that was the worst case scenario on the worst day in recent history. So maybe I'll take a chance at it not coming back.
Tesla, Michelle wants to know about TSLA. Horrible day a few days ago. Got under $300 on Friday, but then whipsawed right back up over it. I mean, it's all about this 295 to 300 support area. It has been support forever. You go out to the weeklies, you can see it basically since we're going back to April 2017 was really the last time we were back below like that 294 area. So I'll call 294 to 300 major support. What's Nick Shaheen looking at, though?
Well, Nick Shaheen, well, here's the thing. I am not a fan of Tesla. The cars are okay. I finally saw the first Model 3. I live in Tesla country, and I've seen one. And it was not very pretty. Color was bad, and it looked like a shrunken X, which is not pretty. Reminds me of the Aztec. But they're good cars. People love them. They're reliable, etc. So no knock against the car itself. My knock is against the opportunity, the valuation. So they tell us it's not a car company. That's fine. The bullish thesis is so muddled that on the conference call, the first thing they talked about was SpaceX success. Like, it's a different company. So, but nevertheless, it's Elon. So here's my problem with Tesla. it's too dependent on Elon, and Michelle and I have gone back and forth on this one. But what if he goes away for one reason or another? I know he said he's committed, but crap happens. So what if he goes away? And second of all, if we're worried about higher rates, guess who hurts the most? People who need to borrow money to operate. And the last time I checked, Tesla needs to borrow money to operate. They bleed cash, and they need cash to deliver their beautiful cars and their 400,000 plus sold cars, which I'd like to know that new number. How many people have canceled? Because I know at least a couple of people that have canceled and bought Chevy Bolt, the little tiny thing. Not that it's a better car or anything, but they got sick and tired of waiting and they canceled. So
good point.
Yeah, so I don't know the new number, but besides, they're not delivering anything, and they're talking about delivering trucks next year and delivering whatever else, buses, and I don't know.
Maybe doing too much and not focusing on,
They wanted to build the semis and then the mid-sized trucks, kind of like an F-150 or something. So I don't know where Tesla goes. If you want to trade it, trade the price action, unless you're a hardcore believer in it long term. Like, what was the top in Tesla? When on CNBC there was an analyst, and she said it's going to 4,000, and she was.
What you come up with 4,000?
No, I kid you not.
Nick.
I fell out. No, I fell out of my chair.
That would be 10. Okay, so 4,000, and this is what when people throw out these. Look at the market caps. I mean, that's the one thing when people throw out these ridiculous targets.
Well,
so now
she said the market cap too, and it was in the trillions probably. I don't know. I forget.
$53 billion at 300. So if it's going to 4,000, that means it's going 10 times.
It was Catherine. It was Catherine
Nice.
Wood. She's the CEO of ARC.
Yeah,
and she
sounded like a smart person until at the end of her conversation, she threw out the 4,000 number. Okay, met what in 2075? I mean, I don't know. But
it's like Bitcoin was going to 50,000 or a million. Remember,
I would believe Bitcoin going to a million than Tesla going to 4,000. I will buy the call.
Bitcoin goes to a million, Tesla could go to 4,000.
Just one quick on the Tesla. I've been talking to a couple places that install solar panels for houses and things like that. And all three of the guys that I talked to were just like, and I mentioned, what about the Tesla product, solar panels? They're like, no way. That's never going to happen. I don't know why people are investing in that Tesla company. They're expensive. I don't think there's been any Tesla solar panels done in houses in Michigan. And they were just like, I was like, oh man, maybe I should short the stock here. But that's just an anecdote. All right, Nick, we've kept you a long time here. 857, Nick Shaheen. He's the author of Create Income with Option Spreads. What we like about Nick is his technical and fundamental analysis of the market. Really enjoyed your video over the weekend. And Nick, we'll speak to you again next Tuesday.
Looking forward to it. This was a lot of fun.
All right. Thanks, Nick.
S&P's leaked a little bit here, 2641. You got mid-range on the session. I know I harp on that a lot, but mid-range is 47.75. And then that little pop that you just had took you up to 47.25. So for me to get any kind of bullish inclination here, we got to clear that 47.5 area and hold that for a chance to test the pre-market high. Coming back on the downside, it's going to be tricky here, folks, because 2336 have absolutely nothing there, but you're at big level now, and I don't want to go all the way down to that double bottom at 25.29 and a quarter, 25.30. But Friday's close was 19 even, and Monday's low was 20. So that's 20 handles away. I think we're going to grind our way. I mean, if that would be a target on the downside, I think you're going to see more of this yo-yo action today. What are you seeing out there, Dennis?
I mean, this is just a tricky market to trade here now because the ranges have been so wicked. I mean, you've got, now you look at this thing and, 252, 264, we're still basically where we were yesterday when I was talking on the show, but you're 120 handles from the low. You're 200 handles from the high. You're kind of in the middle of nowhere. So it's still going to be a battle between the bulls and the bears. I mean, I look at this chart and it could go either direction. It's a coin flip. We could continue. The bulls could take charge, or we could go back down and test the lows in the next couple of days. So it's really a coin flip. You got to go with the flow. The momentum starts going in one direction. Then obviously, maybe that gives you a tell. But as of right now, a lot of sitting on the hands here because we are in just the middle of this trading range that we've been, not even trading ranges. We're in the middle of the last few days of ranges. We're starting to get, less range. So volatility is coming in, which is a good sign for the market. But again, you know, if you're coming, even look at a stock like Apple, which we just analyzed, and they come in here and buy it now at $162, it was 150 3 days ago. So, and it was 177 3 weeks ago. So I don't know. It's just kind of in the middle of nowhere. And sometimes the best thing you can do is just sit back and analyze it and, you know, sit on your hands and not make a trade. And maybe I'm going to be sitting back a little bit today.
All right, Spencer, 9 o'clock here on the nose. What's going on Wednesday?
Well, I'll just run through a couple ratings real
Sure.
fast.
Ratings?
Not a lot.
Ratings?
Not a lot to
They're
speak
ratings?
of. Not a lot to speak of. Just a couple I want to mention. Celgene catching an upgrade this morning. At Barclays, 2 overweight. And NetApp, NTAP, with a double upgrade at Loop Capital and Bank America, both from neutral to buy. And those are the only ones on my radar. No downgrades to speak of that really were interesting to me. So just NetApp and Celgene this morning. But that's it for us today. Hope you guys enjoyed it. If you want to catch the podcast, you can do so on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket. Thanks to Nick Shaheen. Thanks to all you who joined us today in our chats on YouTube and at premarket.benzinga.com. On tomorrow's show, we're joined by Bill Santiago. He is an independent trader and also a comedian. I think he's the only comedian
Nice.
we have on our show. Because he trades. So.
And you know what? When I emailed him a couple of weeks ago to get him on the show, I'm like, hey, you've been tuning in lately? And he sent me a screenshot. He happened to be listening. It was like in the middle of the day, and he listens to our show on iTunes. And he took a screenshot and sent it to me.
There
we got to see how Bill's doing. He's
All
a
right.
funny guy. I'm trying to get him in Detroit.
All right. Well, Bill will be on tomorrow, but that's it for us today. So have a good one, folks, and join us again tomorrow.